What is going on, Gigi Gang? Happy Tuesday morning today. I hope you guys like the new setup in the car. I got a new Jiggy my rig. I got the new mic mic'd up. And let's talk Tesla while I semi not engage FSD because I'm actually not too far away from where I need to be. I hope everyone's doing well on this beautiful sunny Vancouver day or wherever you guys are tuning in from, city, state, country. Let me know in the comments. Let's talk Wall Street a little bit. As we record this, Tesla is up, and I'm just going to pull over here so my jig doesn't move too much right now. But as we talk right now, Wall Street, Freudian slip, Tesla stock is up 2.5%. 2.5%. And yesterday was up 5%. We're at a point now where Wall Street is, of course, it's always been the case with short-term fluctuations. Wall Street really does control where Tesla stock goes, especially in the short to medium term. Now we're at this awkward position where pretty much everyone on Wall Street is kind of looking at each other to see who's going to be the first ones to materially lower delivery expectations prior to Tesla announcing that. I mean, it's all but confirmed that we're probably going to get some sort of lowering of expectations from Tesla on delivery volumes this year. By how much? That's really the question. And Wall Street, I mean, Adam Jonas of Morgan Stanley released a new note actually this morning. And even though his price target is, I think, 310, his EPS for this year is very ugly, right? I think his EPS estimate's $1.30 for this fiscal year. So, you know, he is quite on the lower end of the EPS, and I think he only has it going up marginally next year before then climbing the year following. So, you know, though we really don't talk about it, I think, enough at the moment, I mean, if you track EPS estimates of Tesla versus Tesla's stock, they very much move in unison. There was a point in 2020 where the stock moved up prior to EPS estimates moving up, and then EPS estimates caught up to the stock price and vice versa. We're now at a point where the stock moves before EPS estimate revisions happen, right? Again, when the stock was falling for the last couple of years, it was the opposite, right? EPS estimates would fall, stock would fall. Now we're getting ahead of it again. So all that to say is, if EPS estimates continue to come down here in the next little bit, I would not be surprised to see some more short-term volatility. But here is the big but. FSD subscription. I'm at a point now in the car. I have 12.3.3 that I'm 100% buying FSD subscription, not the package outright, because I don't think it makes sense for me. You guys know I don't drive very much. I think I have how many kilometers do I have logged on this? Like, really not a lot. I bought this car new 2020, and as it stands right now, I don't even know where, 22,000 kilometers logged on the car. So, but that being said, the subscription still makes sense for me. It's safer than I would be. I can have it engaged most of the time, but then override it by pressing the accelerator if I want it to go faster. I'm quite enjoying it. And I guess the question you have to ask yourself if you own a Tesla and you don't have FSD yet and you're thinking about subscribing is it worth it for you? And everyone's going to have a different use case. Of course, I can make content from it, so that helps as well. But really, I mean, the software is unreal. I'll tell you a quick story. Yesterday, I took 3 people for FSD two people for their first FSD ever experience, and pretty much blown away at how, first of all, they were blown with technology. I won't speak for them too much. But number 2, I was blown away. And the reason why I was blown away was because they got used to it so fast. Meaning, I didn't get the, make sure that you're holding your wheel here, or, that incessant nag. It was very natural. They said very human-like. They had to ask me multiple times through the trips, like, are you driving? Is that you right now? Even especially during those narrow road situations where you're kind of negotiating with a driver coming up, oftentimes they just didn't believe it. A couple of times they were like, why did the car slow down there? I was like, oh, there's a pothole, or there was that speed bump. And so I was like, oh, yeah. And eventually, I'll be honest, they completely tuned out driving. by the end of it, and in really like a positive way, meaning they're not really worried about the car. One of them actually said that they think it drives better, and actually safer and slower than they would. So all that to say really is, again, this is my first FSD experience. I didn't have anything but autopilot on this car. So maybe I'm, getting too excited too fast about FSD, but I hear the sentiment from people in the comments that had a version 11. They said, Yash, you don't want version 11. I tweeted out, go follow me at Hey It's Yashu. I said, I kind of wish I had version 11 for a second so I can see how different version 12 is. And I got a lot of people saying, no, trust me, you didn't want version 11. It barely worked in Vancouver. So, if this subscription revenue, back to my original point, if this subscription revenue really starts to accumulate, I can actually start to see this to be a really big driver into EPS. And I know it's early to say that, and I know it's probably a little bit grandiose still because no metrics have come out. But if Tesla says on their earnings call coming up, hey, we've had, we've enabled it for 1 million people or 2 million people in North America, and we've had 100,000 of them subscribe already. I think Tesla is timing this quite well by, doing it. So by the earnings call-ish, they'll have a good idea on how subscription not perfect, because if they did it after the April the 30th, it would have been better. But I think they're doing it enough to give a signal for quarter two. Quarter two might need a little bit of help. I think we know this. I don't think volumes are going to be that much better. But here's hoping I'm wrong. And so when we talk here about Tesla, when we talk about EPS is all that matters really for a stock. The question is, as a bull, our thesis of EPS is that it will exponentially grow with software and the fleet and autonomy and bots. And Wall Street continues to just look at it from an auto's perspective and go, this is how many cars Tesla is going to deliver, and this is how much money they make per car, and that's it. Forget about autonomy. So, Tesla is a story of many tales, and it's kind of choose your own adventure at the moment. I hope this earnings call brings a little bit more light into a lot of the issues short term that Tesla has to weather, a lot of the storms have to weather. But look, I mean, Tesla is in a cyclical business, and yet they are still continuing to grow, albeit smaller than they did before. But I mean, it's hard to find any autos that are having a good time right now. So I'll leave you guys with that. Hit subscribe on your way out. Yash signing off, and maybe next time I'll have some driving videos up for you. Take care. Have a great, wonderful rest of your week, and hit subscribe and leave me a comment down below. Peace out.